Welcome to the Fuller Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:17 p.m. that is Central Time. Today is April 17th, and I'm going to do the big picture long-term audio and video for the various different asset classes today because tomorrow is a holiday in the UK, and so is Monday. I'm going to take some time off, and the service will renew on Tuesday next week. And I think that what we look at right now is the stellar performance of gold relative to the stock market, the uncertainty that has been unleashed as a result of the tariffs, but I think there's also the underlying debt question. And I've got a couple of interesting charts that are worth considering, uh, particularly relative to household income. But before that, let's also consider what else is going on in the markets, because oil prices continue to move higher. Precious metals were a little bit uh, down today. Silver was down more than gold, and hasn't really had been able to uh, gather sufficient demand yet to push on to new recovery highs. Then we've seen a strong performance from India, and that continues to look like a market that is likely to be one of the primary beneficiaries of the trade war between the USA and China. What we're also starting to see is that we may not have evidence of a Powell put, but it looks increasingly likely that we do have a Trump put. In other words, the Federal Reserve yesterday under Jay Powell was quite clear in stating that they're in no hurry to cut interest rates because they do not want to encourage inflation. And they want to make absolutely sure that they've got inflation under control before they begin to cut interest rates because they don't want to create a durable trend. They want to ensure that the jump in prices was a one-off event and that they want to go back to low inflation. Of course, that was not greeted particularly well, or that news was not welcomed by the Trump administration. They're already starting to talk about terminating uh, Jerome Powell's administration or position at the Federal Reserve. And of course, that raises all kinds of questions, and it created a storm of commentary about whether Jerome Powell would be fired, what would have to happen in order for that to actually transpire. Then, additionally, would it be the death knell for the Fed's independence? But I think there's this whole question about independence. Are they truly independent already, considering that the head of the Federal Reserve is a political appointee, and we have ample evidence over the years where they have facilitated the worst inclinations of the different governments to continue to spend beyond their means. So this whole question around Fed independence is, I think, rather trivial. What I think is much more impactful is that the Federal Reserve is basically beholden to the bond market. And if the bond market were to basically uh, conclude that the Federal Reserve was acting in an irresponsible manner, well, then yields would rise, and that would induce discipline in the entire monetary and fiscal administration. So we're in an interesting environment right now. But certainly, when we look at the Dow Gold ratio, well, it's continuing to contract. So that is the clear outperformance of gold relative to the uh, the the Dow Jones Industrial Average. Now, I think since this is a monthly chart, we should really update it because we've had a material advance in gold this month, and it has been primarily driven by not only any longer by central banks, but also by ETF accumulation, but particularly so in China. And I think something that was really brought to my attention this week is that this chart of the total known uh, holdings of gold